Let's make a start. We've got 12 students, that's good enough. Let's have a quick review of the final accounts for a limited company. Now we're just going to home in on the important thing for now, and that's this statement of changes in equity. Okay, so this is a supplement to explain this. Okay, and what's this that I'm hovering over? The equity or the capital and reserve section, the capital section. Now, very noticeable that these figures on the Socie, the statement of changes in equity, are the same as these closing figures on the capital and reserves. This table aims to show what happened during the year. So it has a starting position. So if we looked at last year's statement of financial position, these figures would be the capital and reserve figures. During the year, 3 or 4 things have happened that are shown here. There could be more things happening. We have shares have been issued, and that accounts for these 2 figures that I'm hovering over. Okay, ordinary shares and share premium. Share premium will be explained later on. The revaluation reserve, non-current assets have gone up in value, and the profit earned by the company is shown there, and we call it retained earnings because it's after the dividends have been taken off and the tax. Okay, and that gives us a final figure of 1.25 retained earnings. And again, just to reiterate, we can see these figures in the statement of financial position. Okay, at the bottom, the capital and reserve section. Okay, let's move on to document 372. 372. So for those that have got it printed out, brilliant. For others, obviously it makes it very difficult and we may struggle. Let's do our best with what we have. Document 372. Again, this was completed by you independently last week based on a lesson. I'm going to quickly review it. Otherwise, we're going to be stuck on one point forever. Right, document 372 then. Right, let me just zoom in a little bit. Right, there might be slight variations to this document and the document that you have, or the document that you saw in the lesson. Essentially, it's the same though. Right, so we know what a statement of changes in equity is. We've already explained it. It gives detail about what's happened in the capital and reserve section during the year, with opening figures, closing figures, and in between anything that's changed. Let's have a look at an example. Right, so this is a very simple example of a capital and reserve section. It has ordinary shares and it has retained earnings. What it doesn't have, compared to the previous one, is the ordinary share capital, nor the share premium, nor the revaluation. Okay, so it depends on the question. Some questions will have all, some questions will have just 2 items. Okay, so the question posed here is that's our starting position. And the examiners have given us some figures, what's happened during the year. We've made profit, we're distributing dividends, a share of the profits to shareholders, and we have to pay corporation tax. Okay, now if we're going to show this opening figures in the capital and reserve section and show them as closing figures, essentially that would be the answer. Let's quickly trace back to make sure that we understand how it works. Well, we said nothing's happened to the ordinary shares. They haven't been affected. Shares have not been issued, so that figure remains the same. In contrast, the retained earnings, of course, have changed. Now, let's just make sure we're happy with the calculation. We started off with 100,000. The business has generated profit from operations of 80,000. We've distributed dividends of 20,000 and we paid tax of 16,000. Hence, we have 144. The closing position is 345. Okay, now, more important for the exam would be how would you represent this in a statement of changes table? a Socie table. Now, that's out something that I don't think you have. I might return to that, but let's have a look at this information, which I may. No, in fact, I'll leave it there. You can. It's easy to remember, just two figures. How do we represent that? Well, this is our Socie table. Now you can trace back the opening figures. We started off with 200,000 in ordinary shares, 100,000 in retained earnings. During the year, we generated a profit of 64. Now, why have we not put the 80 in there? Very important to note this. When we say net profit or profit from operations, actually, profit after tax, isn't it? Profit after tax. Let's just double check that, prove it. Profit from operations was 80, tax is 16, difference is 64. Okay, so very easy to see where the figures have come from. Simple example, take off your dividends, that stays within the Socie table, tax is not there, that's the thing to note. Otherwise it's really easy to understand what's going on. These were the opening figures, these are the closing figures, and we've taken into consideration three things by putting the 64 in and the 20. What three things? Well, it started off with 80, take off the tax gives us 64, dividends 20. Okay, three things. Then we have a final figure. If we add down 300,000 plus 64 minus 20 gives us 344. A double check, 200 plus 144 gives us 344. So this total column, in some exams it's required, in some exams it's not required, but it's a good checking tool to see if you've got it right. To some extent, it tells you that you've got it right. In other words, if you add down, it gives you that figure, and if you add across, it gives you the same figure. Okay, so the focus of the lesson is the Socie and how it changes, just for those people that are joining us now. Now, I'm not 100% sure that this is on your sheets, but again, it's an example which I'm going to talk through. You can start annotating and making notes if you've got it printed out. Alternatively, and probably preferably perhaps with this question, this example illustration question, perhaps if you just watch it carefully now, raise any questions, try to participate and engage, and then later on when you re-watch it, perhaps you can make notes then. Okay, so this question is similarly like the other one. It's given us the opening position. This is the capital and reserves section of the statement of financial position, also called equity. Rather than the other one where it had just two figures, this one has three. It's got share premium in it. Okay, it's got share premium as well as ordinary shares and retained earnings. Right, let's have a look. So this is the information that the examiners would give us. They'd say, right, ordinary shares during the year issued were 250,000. That gave rise to a premium of 150,000. I think it's worth explaining what share premium is now. Again, quite briefly, because it builds up later on. When a company issues shares, they have a price. That price, if it is above the nominal value is the figure that the shares were sold for originally. So for example, in brackets next to ordinary shares or in front of it, it might say 50p shares, £1 shares, £1.50, whatever it might be. Okay, if you are able to sell above the nominal value, you put the remainder in the share premium. That will become a lot clearer later on. Anyway, these are the things that happen. The issued shares raised 250 plus 150 in cash, which goes into the bank. Top half of the statement of financial position goes up. Accordingly, the bottom half also goes up to maintain the balance between the top and the bottom and to ensure double entry has taken place. The examiners are telling us that profit after tax is 140. Now, they could have tricked us in a sense. Perhaps they could have said tax is, I don't know, 30,000. Of course, then that would change. For us though, when we put it into our Socie table, we don't take that figure of 140, we'd have to take the tax off. In this case, we haven't got that complication. Now you can see the value of ticking things off. If you tick things off, you wouldn't make any mistakes like that anyway. But in this case, the tax is already taken off, presumably, because there is no figure. I put it in brackets there later. Dividends were distributed at 32,500. They were paid during the year. Okay, let's just go through these figures then. Trace back the figures to the equity section there. No difficulty there. Tick off the additional information that's been given. Ordinary shares have gone up by 250, and you record this in a line called share issue. It could be called a rights issue or a bonus issue. In this case, it doesn't tell us whether it's a bonus or a rights issue, which we'll cover later. It just says share issue. So 250 ordinary shares go up by, but also this is part of the ordinary share issue, but this is a value that's greater than the ordinary shares. They were sold at greater than the nominal value, which is expected as the business grows, the value of the shares also grow. We add this figure across. We record the net profit, 140,000, and remember that net profit in your minds, if the table is already written out for you and it just says net profit or profit after operations, in the Socie table actually you're looking for profit after tax. Okay, despite the description there, remember, select the figure profit after tax, which may be given to you or you may have to calculate it. Okay, but take the tax off. And then finally, this figure, normally you have to calculate it. In this question, simplified dividends distributed, which affect the profits. Now you've got to be careful. There is logic behind why we're including it in this column and not in the ordinary shares and the share premium. Dividends affect the profit. They reduce the profit. Where do you pay them from? From your profits. Straightforward. Okay, again, add across. And if you've got a calculator to hand, you're being active and you're participating, as opposed to in bed with a coffee, add across, please. Should give you 1.1655 million. Add downwards should give you the same figure. And that gives you some reassurance you've done the right thing. Okay. Now what I'd like you to do is, this was the opening figure. That's what we started with, which is of course the end position of the previous year. I'd like you to do the equity section as at 31st December 2017. In other words, after these changes have taken place. So you're doing this with the changes taking place. Since this will only take about a minute, I'd like you to do it within a minute. Okay, that's about a minute. And really, it's very straightforward. All you'd have is this with the same narratives, the same descriptions, and the figures, of course, you would select from here. Now, the examiners may ask you to do the Socie table and or the equity section. You need to be aware of the terminology, of course. Now, this is your answer, this final column. I've shown the opening balances as well. Now, actually, when companies, limited companies present their accounts, they show both years' figures on the same page. Okay, we've avoided that up to now, but if you do see it in a question, don't be perturbed. We'll deal with it, we'll practice it before we actually see it, but this is how you present it. In the exam, you probably just have to do the closing or the opening figures, but there is a potential that you have to do both. Started off with these figures. We had an issue of shares, which affects ordinary shares and share premium, and of course, retained profits, which is an accumulation of profits after tax and dividends and any other adjustments, which we haven't dealt with so far. Okay, good. Let's move on. Now, any questions, please feel free to ask. I'm just looking at the chat, see if there's anything. Good, up to now, nothing too difficult, so I think you've understood everything, but please be inquisitive, please participate and join, and certainly be active if you're quiet and not communicating with me. At least, right, so we're on document 373 now. Right, Charles is saying he's got 1165900. Okay, let's double check that. Is there an error in the figures? Is there an error in the figures? Now, this is this type of thing, I will put little errors here and there, and that tells me, if you detect them, that you are engaging, you're at least getting your calculator out and adding things up. Can you check the figures? Well, you should have your own figures now, and they should. Well, if they don't correspond to the figures I have, let's check where the error is. Right, ordinary shares, should that be 400? They went up by 250, so that is an error. Okay, that's an error highlighted. Let's correct it. Okay, and this is, I made this error deliberately for you to see that we are using corresponding figures in the capital and reserves to which the Socie table is equal to. Does that help? Is that right now? Right, other than Charles, has anybody managed to get a calculator and top these figures up? Right, it's only Charles and Bobby that are participating, as far as I can see. I need more evidence of people working on this. And don't be too cool for school. School will resume, you will have exams, this type of thing. If you've not been participating, we won't have time to go over this stuff. So when we have the mock, this will be in the mock. So please learn now. Good. Thank you, Ace. Thank you, Daniel. And of course, guys, at the end of the year, we do testimonials, which are reports for university, reports and references for jobs. If you can go into jobs, we do them at the end of the first year, and we do predicted grades. So you've got to demonstrate to teachers what your level of work and your understanding and achievement is. If you don't communicate that, of course, in the reports we have to write, you know, quite good, ended up with a D, not very good at communicating, not very good at engaging and participating, probably end up with a D at the end of the year. Okay, so I need you guys to participate. Thanks, Zach. Thanks, Jack. Okay, good. Also tells me that you're doing the work. I'm not going too fast, too slow. In fact, at the moment, I think I'm going very slow. I would say too slow. But judging by participation, that doesn't always play out. I need you to participate. Even if it's a one-word thing, like Joe's just put in for me. Thank you, Joe. Same, Mohammed, same. That's sufficient. No, I know now I can move on confidently. Okay, let's move on to document 373. So we're gradually building up to more and more difficult Socie tables, but the principle is the same. We have a strong foundation now. Right, in reality, when a company issues shares, there are three ways they issue them, or three circumstances. The first is when they start the company off. Okay, it's called floating the company. They invite people to buy the shares. An alternative to that, or not really an alternative, once the business has grown in size, they may issue shares again. We call that either a bonus issue or a rights issue. We're going to deal with rights issues for now. Okay, so put the bonus issue aside, let's deal with rights issues. It simply means we're issuing shares to existing shareholders. Okay, and that's what it says in the introduction there. We're issuing shares to existing shareholders, says it there rather. And rather than saying we're issuing 1 million shares or 1,000 shares, it will say on the basis of 1 for 2, or 1 for 4, or 3 for 4. So some kind of ratio. What does that mean? Well, 1 for 2 means for every 2 shares held, the investor has the option to buy an extra 1. Now, actually, if you read those words carefully, are you happy with what it means? 1 for 2 means that for every 2 shares held, the investor has an option to buy an extra 1. Does that make sense? 1 for 2. For 2 is what you've held, and the company is offering you to sell 1 for every 2 that you have. So if you had 4 shares in a company, what's the maximum number of shares you are being offered? If you currently own 4 shares in the company and there's a rights issue and the rights issue is 1 for 2, what's the maximum number of shares you can buy? Well, this is Usher's saying 8. This is how you do it. You'd say the ratio 1 divided by 2 times by the number of shares you already have, 4. What does that give us? This is the additional number of shares. It is 2. So how many shares do we have all together now? Thank you. It is 2, and what we had before was 4. Now the 4, if you're looking for 4 in this paragraph, it's not there. It's just an example that we've made up. More likely, more likely, is we wouldn't be talking about a particular shareholder. We're talking about all the shareholders in the company. Now, what if there are 1,000 shares in circulation at the moment? And the rights issue is on this basis, which I'm highlighting, 1 for 2. How many shares are going to be issued, and how many shares will there be in total after the issue? So that 100,000 is existing shares. 1 for 2 is the rights issue. We are asking now, question mark, how many additional shares and how many in total after the issue? Right, guys, thank you for your participation on the previous one. Let's have a go at this then. So the existing number of shares we're assuming are 1,000 at the start. The company wants to raise more capital. Perhaps they're developing a product, expanding. How many additional shares are we issuing? Okay, Charles, we'll check your answer in a minute. Let's see what other people have got. So Charles, you're saying there are 500 additional shares, and your workings, let's see, you'd say this is the ratio multiplied by the existing number of shares. Additional shares must be 500. Therefore, thank you, Charles, that's correct. In total, how much have we got now? How many shares have we issued? How many shares are in circulation? Even though it's an easy solution, I do want you to engage and answer, please. Obviously, I can't see you, I can't see what you're doing, but this way, at least I can see that you're progressing and you're understanding it. Brilliant, that's quite all of you, nearly. Well, all the active students have told me it is, of course, 1,000 that we had at the start, plus the 500. Without doubt, it's 1,500. Okay, brilliant. Right, so that's just a little bit of practice on that, a little example, which is not in your notes, but you can re-watch on the video. Very simple example. It will get more difficult now, of course, so you might even never look at that again because that was oversimplified. What happens in reality then? Right, let's get back to a statement of financial position, something that you recognise. Non-current assets at the top. Then you've got the rest of it summarised. You've just got your current assets minus your current liabilities. The total is 100,000. That's your net assets. You don't have to label that. I think it's good practice too. And then you've got your equity section. Equity section made up of ordinary shares, share premium, revaluation reserve, retained earnings. Now we know from the definitions what all these things are. Okay, this is all the capital raised from issuing shares, and this as well. Now let's explain the share premium in a little bit more detail. Just build up every time we get the opportunity. It says ordinary shares 50p. Now that's the starting price when this company was set up. Over time, as the business builds up, the market price of these shares goes up. Whenever we issue shares and we record them in the ordinary share capital, we're not allowed to put anything above 50p. So for example, if we issue 100 shares and we sell them for 75 pence, okay, so this is an example. Not the example that follows on your sheet, but just a quick illustrative example. So we issue shares. I'm not going to mention the rights on this. We'll just say issue shares at, can't remember what I said now, is it 70p? 70p, and we're issuing, let's imagine it's 1,000 shares. Now, how do we record that? Well, let's think about it. First of all, how much money has been raised? How much money has been raised? This is simple. You don't need accounting or business studies for this. You need arithmetical skills. It's 70p times by 1,000. What does that give us? In pounds, how much does that give us? We're selling shares for 70p. We're issuing 1,700 pounds. Thank you. 700 pounds. Now, that's ordinary share capital. It would make sense to put 700 into this figure, or add it to this figure. Now, don't copy this down. Just watch, please. It's not the case. We don't do that. We're limited to 50p there. So what we have to do is break it down. Now, this is how much your bank has gone up by. This is a capital raised. We're all happy with that. But when we record it in the equity section, we have to split it between ordinary share capital, and that would be 50p, it's limited to 50p, times by the number of shares that we've issued. So you put 5,000 in there. We know, however, 500, sorry. We know, however, we've actually raised £700. Now that went straight into bank. That goes into the top half of the statement of financial position. At the moment, we have a difference of £200. Top half and bottom half do not equal. We haven't maintained double entry. So what we do is anything surplus to the nominal value, and that's the nominal value highlighted in pretty pink, we put in the share premium. Okay, and that would be the 20p times by 1,000. Now you can see the top half of the bank statement of financial position has gone up by 700, and the bottom half has also gone up by 700. We would add 500 there, and we would add the share premium of 200 there. Okay, again, this is not on your sheet. I'll leave it there as a kind of a starter baby example. I'll say I'll leave it there. I'll leave it there for the video. I have no choice. I'll leave it in there, of course, but I need to get rid of it here. Why? Because we're going to use these opening figures for a different example. That's what I'm saying about making notes. You might not need to make notes for the simple things. If it's one or two words, stick them in. Otherwise, watch, engage, do the calculations, but you won't be able to get everything down. Right, so what's this question about? Right, a rights issue on a basis of 1 for 4 shares at a price of 70p. All right, it happens to be 70p. Okay, good. And what did we say about 1 for 4? It means for every 4 shares in circulation, 1 will be sold, 1 will be raised. So they're going to go up by a quarter. Simple maths here, simple maths, and it usually is. It's just about plucking the right figures out of the air. Not of the air, of course. Right then, so what do we do then? First thing to do is to work out how many additional shares are to be issued. Here we can see that they are going to release 1 additional share for every 4 already available. How many are already available? Right, how many shares are already available? Given this information here, if you've got the sheet printed or you've been through the lesson, you'll remember it, but still participate, humour me, join in with me, help other students. How many shares have been issued here? This is the information you'd have to work it out. Well, which line would we be looking at? It's this line here. What does that line tell us? We've raised £50,000 by selling 50p shares. So how many shares must we have issued in the first place? Ace is saying must be 100,000. Usher, Charles, all agreeing. And how did you do that? That's how many shares were issued, and this is the value of how much the company raised. Okay, simple maths, nothing difficult. Right, why do we need this figure? Why do we need this figure? Because when we do a rights issue, we've got to know the existing number of shares. What we said was, for every 4 shares that are in circulation amongst our shareholders, we're going to issue 1 additional share. So we need the existing shares first of all. And inconveniently, it's not that figure there in number without the pound sign. It depends. It can be if it was a £1 share, but if it's anything other than a £1 share, we have to do this little calculation. That tells us that's how many shares we have existing. And now we're in a position to work out how many additional shares are going to be issued. Very straightforward. Follow this on the screen. So we've just done that calculation now. 100,000 shares are already circulated in the market amongst the shareholders, buying and selling to each other, pushing the value up, okay, above the nominal value being 50p. It's all about supply and demand. If you do economics, even if you don't do economics, it's a general term, everybody understands that. Okay, so that was a calculation. That's 25,000 additional shares. Thank you, Daniel. That's the type of thing I'd like people to be ahead of the game, okay? Show the initiative and work it out, provide the figure. Even if it's in front of you, you are working it out, okay? Some people don't have this in front of them, or they've got it on a phone, whatever. Just, you know, be engaged, please. Right, now, how much extra cash will they raise? So if you don't have that screen in front of you, you can't see the answer now. So let's work it out again. Well, that's the number of shares that we're issuing. How much are we issuing the shares for? Right, so you're looking for not the nominal value. You're not looking for the nominal value. We're seeing how much extra cash we're going to raise. So how much extra cash are we going to raise? What's the answer? Charles is saying 17,500. Good, everybody agreeing, brilliant. And it's simply, we're selling them for 70p. How many additional shares are we issuing? 25,000. That gives us 17,500. Perfect. Now that is the figure that will go into the bank account. That's the top half of the statement of financial position. We haven't touched the bottom half of the financial position. Which 2 areas do we record this increase in capital? How do we split it? I could ask the question slightly differently. Do we split it? Do we not just increase the ordinary share capital by 17.5? Charles reckons we'll put it in ordinary share capital, that should be, not original, ordinary share capital and the share premium. Absolutely correct. Old share cap goes up and share premium goes up. Now this, whenever you write it down, get into the habit of writing down what the nominal value is. In other words, the maximum figure you can put in here, 50p per share. So how much are we going to put in the ordinary share capital? It's restricted to 50p a share. It's not difficult. It sounds complicated, admittedly, but we're just splitting this 17,500. How do we split it? Figures, please. Okay, Daniel very quickly has said it's 12,500. If you wanted to prove it, it's very simple, but if you wanted to prove it and show the workings, which you'd always be encouraged to do so, you'd say 50p, it's restricted to 50p, times by the additional shares, gives us 12,500. And then to prove the remainder goes in there, you can't just really say 17.5 minus 12.5 because you've not shown the workings. What you do is say the premium per share, anything above the nominal value, times by the additional shares issued. 1,000. And again, for those students that are really thinking about the double entry as well, you're finding it really easy and you're saying, well, I want a bit more, stretch my brain a bit. Bank has gone up, so that's one side of the entry, and then the other side of the entry is these two figures. So in fact, if you are able to jot this down, that was the debit because an asset has gone up. And then unusually, we have two credits. We're not breaking the rules of double entry. We say for every debit, we have to have an equal credit. The credits have been split, that's all. Okay, good. So take advantage, jot that down, make a mental note of it, whatever you need to do. You can always watch the lesson again. So that's all the workings and we understand what's going on. Let's just have a look at the rest of the spiel here. As we've said, the top half of the statement of financial position goes up by 17.5. It's gone into bank. The bottom half, we've said it's going to be split between the premium and the ordinary share capital. We've done the explanation there. We've already done the figures, so that's easy to understand. We've split it between share premium 5,000, 12,500 for ordinary shares. Maths is very easy. Just remember though, ordinary share capital is restricted to the nominal value. Anything above the nominal value, 20p in this case, is shown in the share premium. Right, any inquisitive minds, any questions at this stage? Any questions at this stage? Let's just have a look at how the statement of financial position is affected, and also let's record that in a Socie table for clarity. Right, so this was our opening position. And this is our closing position. Fixed assets did not change. They could have changed if there was a revaluation. Okay, if there was a revaluation, that figure would have changed, and therefore that figure would have changed. Non-current assets, no change there, that's fine. How come net current assets have gone up? Well, the working's there. We know bank has gone up by 17,500, that's fine. That means the top half of the statement of financial position has gone up. The bottom half has to go up as well. How? Well, we split it as we've seen already. Ordinary share capital, share premium go up. Reval and retained earnings in this question have remained the same because we've got no information on them. It doesn't mention the profit after operations. It doesn't mention finance charges, tax, dividends, nothing. Okay, so it's the same figure. That's easy. Opening position, closing position. Again, please be inquisitive if there's anything going on. Charles, you said no. What's the no? Okay, maybe I posed a question. Okay, fine. You're participating. You're showing me you're participating. That's fine, Charles. Don't need to explain it. Right, now, very quickly then, let's just look at the bottom half of the statement of financial position and let's marry it up to the statement of changes in equity, the Socie table. Starting positions, first line, any changes, the following lines, that's a rights issue. Rights issue affects ordinary shares, so we record it in that column, and it affects the share premium, so we record it in that column as well. We add down, add across, nothing happens to revaluation, nothing to retained earnings. Bob's your uncle, add down, add across, easy. Okay, that is a nice, simple Socie table. Any questions? Any questions? Good. Let's move on. Right, we are not looking at bonus issues this lesson, as I said. Thank you, Bobby. No questions. We're not looking at bonus issues. We're just looking at rights issues. That's all to do with the bonus issue. Let's skip that. We'll return to 373 when we need to. Okay, next document. You'd think it's 374. Or do we skip to 375? Let's have a look. Right, document 374. Right, we've got some questions here. Now let me just assess the difficulty level of the questions and see if I need to help here. Right, so we have an extract of a statement of financial position. This is just the equity section. A rights issue happens. There's no change in anything else. We know now we split the rights issue between ordinary shares and share premium if we're selling the shares at greater than the nominal value. Well, we're selling them or issuing them at £1.50, the nominal value being £1. So yeah, we're going to see a change in the share premium as well as ordinary shares. Now we've done a question like that, so I'd like you to do that question yourselves. It's exactly, well, not exactly the same, it's the same process, different figures. Right, can you have a go at that, please? What I'd like you to do is to fill the Socie table in, and for practice, also, can you do a closing position of the equity section as well? That's our opening position. Let's do the closing position as well. Now, if you're doing it on a sheet of paper, let's save time. Let's say opening, and let's just add a column to that, closing. Ah, can't see it. Thank you, Mohammed. Thank you very much indeed. Right, apologies. Right, I'm going to leave. I've got to leave the lesson for 10 seconds because I've loaded a new document up, and I'll be with you very quickly. Right, documents up 374. As I was mentioning, without the right document being on the screen, confusingly, this is the first question. You have opening figures for the statement of financial position, the equity section. We're familiar with that. We have a rights issue. We are becoming familiar with that. We need to fill in the Socie table. Again, we are becoming familiar with it. What things do I need to point out? Well, probably nothing for most of you. You can do this table without my help. And in fact, that's what we'll do. Based on what we've done the last two example questions, can you fill in this Socie table and then the corresponding figures in the end line will go in the closing balances? That's what we started off with. That's what we're going to end up with. Just a few minutes for that. I'd say 3 minutes, 2 minutes, 2 minutes. Okay, now some of you would have finished that table. I'm doing the workings there. Now it's important to do the workings. You're going to get more and more complicated questions, and the examiners need to see where your workings are, just in case you've made a mistake. Okay, first step, existing number of shares. Now this is easy in this case. You wouldn't really need to do the calculation. They're £1 shares. They've raised £30,000, so they must have issued or sold or floated 30,000 shares. Okay, that's our first figure. Now with that figure, that allows us to work out the additional shares. The ratio given is 1:3, so it's the existing number of shares times by the ratio. 10,000 additional shares have been issued. That's the rights issue, 10,000 shares. How much have we raised in total? So the bank has gone up by the number of shares times by the price that we're issuing them at, £1.50. That gives us £15,000. Now, if you disagree with any of the figures, if there are corrections, please say. Then next step is to split it between the ordinary share capital and the share premium if the value of shares sold is greater than the nominal value. In this case, yes, it is, by 50p. Ordinary share capital is restricted to £1, so it's £1 times by the number of shares. Easy figures here, of course. Some of you can do this, well, all of you can do it in your heads really, but let's just show the workings, because you'll need this for more difficult questions later on. So ordinary share capital goes up by £10,000. Now if we left it at that point, we have got at the moment a debit of 15,000 and a credit, if you're using double entry, of 10,000. Top half of the statement of financial position has gone up by more than the bottom half. Of course, there is a share premium here because we're selling above the nominal value. By how much? By 50p. And for those that are interested, you should be, that is a credit. Got a debit of 15,000 and a total credit of 15,000 as well. Now transferring the figures into the Socie table couldn't be easier in this example. I think the figures might be there, that's why that's not working for me. Let's just see. Now what I've done also is added a total. It's important to do a total for cross-referencing, and when you get more complicated questions, you'll see it will be a good checking device. If they don't add down and add across, then you know you've done something wrong. You go back if you've got time and you correct your answer. In this case, fair enough, the total column is of limited value. Okay, in some exam questions it will be there, in some it won't be there. Now let me see if I've got the figures already there. I have, I think that will work. Right, so let's just put the totals in as well, which we didn't have. 90,000 going across. We have a change of 15,000. The bottom half of the statement of financial position now is, check these figures please, don't take it for granted. Now because we don't have a pound sign, good practice to have the pound sign at the top at least, and that will cover all the figures there. Similarly, I'm just going to do it now. Is that correct, first of all? Is that your Socie table as well? Statement of changes in equity, is that your Socie table as well? Same thing, is it? Or are there questions? Do you have that? Or right, good. Thank you, Joe. Thank you very much. That's all I need. I just need one or two people letting me know that you've done it. You've got the same figure. You haven't spotted any issues. Thank you, Bobby. Brilliant. Now, what about the closing figures? Well, the first line are the opening figures. The last line are the closing figures. Couldn't be easier in this example. Not much going on really. We've got 40,000 premium. We've generated a share premium of 5,000. Retained earnings in this question, no profit was made, no information about tax, so that remains the same. 40,000. Of course, the total is 105. Okay, good. If there are any questions at this stage. So, just to reiterate, the examiners could ask you to do a Socie table with your workings, or they could just say, redraft the equity section of the statement of financial position, in which case you present these figures. Okay, we've done it alongside the opening figures in the question. You would ordinarily just be required to do the closing figures. Good. Let's do question number 2. Thanks, Elliot. Good. Right, can you have a go at that, please? So I'll leave the procedure for those that are still getting to grips with it on the same page. In fact, I'll show the answer for the previous question, most of it anyway. Have a go at that, please. Question 2. You don't have to faff around with the changes that I'm making, just get on with the question, really. Right, guys, can you communicate with me? Have we done this? Have you managed to do the Socie and the closing figures for the equity section? Okay, maybe a minute more then. Right, maybe a couple of you are stuck on the words here. Now they've said at a premium of 30p. Now, hopefully most people have interpreted that as they're selling them for £1.30. They're just saying it slightly differently. They're telling you what the premium is. Apologies, I've just looked at the nominal value. It must be 80p actually, because it's 50p ordinary shares. 50p ordinary shares plus the 30p. That's what gives us 80p actually, okay? So a little trick here, they're telling you what the premium is. You add the premium to the nominal value. That means they're selling the shares for 80p, and it's split between ordinary share capital and the share premium. So maybe that has slowed a few people down. Thank you, Daniel. Yep, 80p indeed. Okay, the rest of the process is the same. That's the thing you need to watch out for in the next question now, or in following questions. They'll either give it to you on a plate, or they'll try to disguise it slightly. Hopefully some of you interpreted that in the right way in the first place. So work out the existing number of shares. I'll just show it here for now. I'm sure most people have done this, but divide that by 50p. Yeah, exactly, Charles. Yeah, the way they say that puts you off. But the premium tells you that you shouldn't go wrong, really. That's how many additional shares have been issued. So I've done my work in there, just very quickly. Because the 50p shares, that's the number of shares that they've issued, and then plain sailing from there. Okay, let me know when you're finished. You should be finished within a minute or so, really. Right, good, thank you guys. So Daniel, Charles, Bobby, Ace finished. A few others have finished as well. Reserved and Shy, what a lovely trade. But bear in mind, I will be writing UCAS references at the end of the year. I need to know that you're doing this right. So show your knowledge off. Okay, share the knowledge. It's going to help other students as well. So I'm not going to go through the workings in this on this one. I'm just going to reveal the answer. I'm going to put the total column in there as well. As I said, that's good practice to put in there. Some exams it's actually required, some it's just worth doing. Insert to the right. Total. And be careful, check my figures. Good, thank you. It's not 20,000 and 12,000, or it is 20,000 and 12,000 or not? Is this wrong? Charles is saying it's not 20,000 and 12,000. Is that one of the deliberate mistakes? Charles reckons it's 2,000 and 1,200. Who agrees? Charles is saying, oh no, Bobby's agreeing. Okay, right, so let's go back and do the workings here. Now these answers were already there. And as I said, I want you guys to participate and not take things for granted. Who agreed with those figures? Did everybody disagree with the figures? Wait, NVN. Wait a minute. Idea? No idea, Charles? Of course you have an idea. I don't want to go through the whole thing though. Existing number of shares. So this is the number scheme that I'm following. I'm not going to write everything in. We already did this. Let's just do it again very quickly. 0.5 equals 160 shares. So we're all happy with the number of existing shares. No problem with that. New shares. That's 160 times by the ratio, which is 1/4. So we're adding another 40,000. Would you agree? Well, I'd like you to be committed. Ordinary is fine. Is the number of shares, is that good? Additional number of shares, 40,000. Talk to me, guys. Is that 40,000 correct? Yep, thank you very much. Now let's work out, remember, I'm following the 1, 2, 3, 4 here. The capital raised. Well, we're selling 40,000. How much are we selling them for? We said 80p. Would you agree that's 32,000? That's how much bank goes up by. Thank you, excellent. And then we've got 4A and B. We're splitting it between ordinary share capital, which is going to be 40,000 shares at nominal value at 50p. Are you all happy that it's 20,000? And then B. Don't want to do B like that, so I'll do it over here. Never gone. Let's try again. Whatever it is, share premium. Premium has got to be same number of shares. By the premium, 30p. Okay. That's a debit. That's a credit if you're thinking about double entry. Credit. Okay, Charles, yeah. Now, did I have them figures there in the first place? Let's have a look. I did indeed, okay. The only thing I'd like you to do there is to insert a total column to the right. That's a checking device, very important when it comes to harder questions. Certainly in this case, not such a big deal. And then once you've done that, can you do the closing balances? Closing balances, bottom line, 100,000. Premium's gone up to 72,000. and retained earnings have not changed. Okay, good, done. Okay, question. Now, I might skip question 3 or come back to it at some point. But we're certainly not doing any questions on bonus issues today. Okay, what I'll say then is that is your homework. We haven't finished though, but that's your homework. Now we're moving on to more complicated questions where more than one thing is changing. Here, only one thing is changing. It's an issue of shares. That has a double impact, of course, on the ordinary share capitals and the share premium, but essentially not much is going on there. Now that you've acquired that information, we are ready to tackle some more questions. I'd call them grown-up questions. Okay, we're going to pull up document 375. 375. If you haven't got it, it's on Moodle. And in fact, can somebody tell me whether or not I sent document 375 as an email? Can you check, guys? Did I send document 375 as an email? Okay, I'm sending it now. So we've made very good progress this lesson. I'm sending 375. Hoping it's the right document. It'll be, yeah, so 375. Okay, I've sent 375 and I'll reveal it on the screen as well. So most of you will be working off the screen, but I'd like to do at least 2 questions on this. One I will do with you and the second one you can attempt. Right, first question, can you see 375 on the screen? Yeah, I think you can. Yeah, you can. Okay, this may look daunting, so let's simplify it. Let's push some of these questions down and out of the way. Okay, let's just focus on one question, and that's alpha. Okay, as I said, I'm going to go through this question with you. There might be 1 or 2 of you. Whoops. There might be 1 or 2 of you who might be able to do this yourselves without any help whatsoever. I'm going to go through the whole thing with you anyway. Okay, so please pay attention because you're going to be doing question 2 on your own. Right, let's just absorb some of the information here. We've got a summarized statement of financial position here, a balance sheet. So top half equals the bottom half, that's fine. We haven't got much detail in there, that's okay, not a problem. Capital and reserves, we know that's also called equity. We're just absorbing some of the information now. We've got a revaluation. A revaluation represents the increase in the value of a non-current asset. Okay, up to now it's 80,000. Looking at the question, all right, there's no revaluation there. Okay, disappointing. I was hoping for a revaluation there. This is something new for us. We've got a dividend in this question, and unlike the other two questions, we've also got a net profit. We've got tax as well. Right, so we've got quite a few different things going on here. Let's proceed to answer this. Right, with this type of question, that's not going to do. First things first then, let's work out the existing number of shares. Now, sometimes it's so obvious you don't need to do a calculation. When they're £1 shares, of course, it just would be 150,000. Okay, but first thing is, just like before, I'm not going to put it down. It was existing number of shares. I will just go through the process so you know what we're talking about here. That's existing shares. Now, you might get lazy and stop doing this, this calculation, but just to be fair, sometimes actually it's worth doing. It can be tricky. Now this is going to be a bit annoying because I've got some formatting going on here. I can't get it on one line. Okay, point number two. What was point number two? New shares. New shares, well, we'll get the existing number multiplied by the ratio. It says 2 for 5. 2 for 5. So I'll stick that on your calculator. 2 divided by 5 times by 150,000. Should have, double check it though, don't take it for granted. That's how many new shares there are going to be. New shares. Third thing, the capital raised. That's going to be the new shares times by how much we're selling it for. Well, it says a premium of 30. Let's not get mistaken here. A premium is anything above the nominal value. The nominal value was £1, so it's not 30p that we're multiplying it by. We're actually going to raise £1.30 per share. With 78,000 there. As I said, I encourage people to try and do this themselves if they can. You don't have to wait for me. Well, I was going to put bank in brackets, I won't bother. 4, remember, is split between A and B. A, we're going to say it's the ordinary share capital. How is that affected? Well, it's got to be restricted to £1 because that's the nominal value. £1 times by the number of new shares. Okay, with this, obviously, it's a simple calculation. No problem. Ordinary share capital goes up by that amount. Share premium, SP, that goes up by the premium, which in this case is 30p, 0.3. Let's just put a note there to make it look right. Multiplied by the new shares that have been issued. How many shares? 60,000. And then just multiply it out. Gives us 18,000. Okay. Now there is another step here. This is number 5, new. It's the dividend. Divs. How much are we paying out? Remember, in our Socie table, we have a column for retained earnings. Retained earnings is what you have at the start, plus the profit after tax for this year, minus the dividends. So we have to work out the dividends. Dividends are straightforward, but please pay attention. 4p, that's the straightforward bit. How many shares are in circulation at this point being the end of the year? In other words, after the rights issue. After the rights issue, how many shares are in circulation? I need your participation here. In other words, what do I multiply that by? Each share will have a dividend of 4p. Daniel reckons it's 210. Can I have some consensus on this, please? Some of those people that have not communicated anything, please share your knowledge. Ace agrees. Daniel's broken it down to explain it is the 150 plus the 60. No more needs to be said on that. Thank you, Daniel. Okay, look, you've got existing shares there. New shares there. Add the two together, gives us 210. Therefore, how much are we giving out from our profit? How much are we giving out in profit here? Okay, it's a calculation. Everybody can do that. Probably using the calculator anyway. 8,400. That's what we're giving out. We need to take this amount out of the profit. But we're going to show it in the Socie table anyway, so the workings will be done in the Socie table. Let's do the Socie table then. Right, I might have to amend this as we go along. Might not need that many rows and columns. Let's just do this. Right, so we have a start position. We have ordinary share capital, share premium. Let's just look at the original one. We have revaluation. Revaluation, we have retained earnings. Insert to the right, and we have the checking tool, the total. There. Start position, we just take those figures given in the question, 150. Valuation, that's going to be a problem. Okay, we'll get around it in a minute. 60,000 total 300. Okay, because I've got some weird formatting on this, I'm going to have to just make the font size smaller and maybe zoom in a little bit. Right, that's the starting position. No issues there, unless I've taken the wrong figure. Make sure the figures agree. Make sure they add up to 300,000. Okay, and then we put in what's happened. Well, we have a rights issue. I'm just going to put RI, rights issue, which affects the ordinary share capital and the share premium. How much does the ordinary share capital go up by? Well, we've done all the workings now, 60,000. How much does the share premium go up by? We've done the workings, 18,000. Trace the figures, make sure you know where they're coming from. The revaluation is not affected by the rights issue, so we can put a dash in there, or not applicable. For the first time, it's going to be not applicable. You don't always have to do that. Just so you know you're not getting confused there. Then when we add across, we have the 78,000. What else has happened? Do we have a revaluation? Let's just look at the information. I remember it. There wasn't one. 0. That doesn't change then. So we don't need to put revaluation down there. Only the things that have changed. What else has changed? Retained earnings, profit for the year, profit from operations. What have they said here? Well, we know it's going to be profit after tax. So let's say PAT, profit after tax. That cell's not affected. That cell's not affected. Revaluation's not affected. Retained earnings is affected. So how much profit after tax do we have? Let's see the information. Tax is 5,000, profit is 100,000. That means we have 95,000. Okay, add across, 95,000. What else happened? Dividends. Stick the dividends in under retained earnings, because that's what it affects. So again, it doesn't affect ordinary share capital, nor the share premium, nor the revaluation, but it does affect retained earnings. It's a minus figure. Thank you. And add that figure across. Son of a gun, I'm going to make these a bit smaller, 9. Okay, add across. Now you're in a position to do your closing balances. Add down, add across. See if it works. It's the end. I guess you're working ahead of me now, hopefully. Take my figures for granted. Maybe I've made a mistake, a deliberate mistake perhaps, who knows. Just do what you need to do. Okay, good, some participation. So imagine I was walking around now in a classroom physically. I'd be looking down at your work and yeah, I'd see Charles has got 464,600. Daniel's confirming that the end share figures, ordinary share capital, share premium. Thank you, spotted a mistake. Thanks, Daniel. Thanks, Elliot. So we're saying that's 10. And that's 28. And do we agree that we've got 464,600? Add across, add down. It should work both ways. And that gives you some level of reassurance that you've got it right. Doesn't prove you've got it right, but arithmetically the figures work. Okay. Now we haven't quite finished there. We've also got to do the closing balance. Right. So for ease and speed, I'm just going to use the opening balance narratives. These are my end figures then. This was at the start. And let's put the figures in. Did non-current assets go up in value? Was there a revaluation? No. 200,000. What happened here? Oops. That's not gonna work. Okay, we need a bit of a calculation here, don't we? Net current assets were 100,000. Did we raise anything from selling the shares? Well, of course we did. How much did we raise? 78,000. Would you agree then that that should be 178,000? Or do we need to set the dividends and tax off as well? Right, this figure is going to need a little bit of explanation. The tabs on this are really messed up, so I'm going to put an asterisk there. I'm going to do working over there. This is the only working that we really need. Where's my asterisk gone? There. Okay, so we need a working here. We're starting off with 100,000. We raise 78,000. That goes straight into the bank. Owe tax, and we owe for the dividends. So this figure here should change. 100,000, check that out please. Have I transferred the figures across? 100,000 plus what we've raised in the bank minus the current liability that we owe for tax and minus the current liability that we owe for dividends. Thank you, Charles. Thank you, Daniel, Bobby, guys. Well done. Excellent. Joe, good stuff. We reckon it's 164,600. Therefore, that gives us, plus the 200,000, gives us 364,600. Now that figure seems familiar, doesn't it? It's the figure that we should have in the Socie table. Let's check what's gone wrong. Right, for now we're just going to proceed. We're going to carry on with the bottom half of the statement of financial position. What we're going to do there is just transfer these figures across, and then we'll work out what the issue is, or if indeed there is an issue. Ordinary share capital 2010, we're picking these figures up from the Socie table. We've done all the working and the hard work now. Don't need to repeat all that. 28,000 for the share premium. 80,000 for the revaluation, that didn't change. Retained earnings, 146,600, and we know we've agreed that the closing figure should be 464,600. So why do we have a difference between the bottom half and the top half of the statement of financial position? Right, let's see who's going to solve this mystery. Why does the top half and the bottom half not equal? Any ideas? Right, I can't see my chat at the moment. It's disappeared. I'll give you a minute to figure that out. In the meantime, if you're stuck on that question, why is there a difference between the net assets figure and the shareholders' funds figure, in other words, the top half and bottom half of the statement of financial position? If you can't explain the difference, go on to question 2. Go on to question 2, please. Right, I still can't see my chat. You guys carry on. Do question 2. Okay, yeah, there's nothing in the chat. Right, guys, I'll put you out of your miseries, or your misery rather. When we do net current assets, if we've generated a profit, that profit has also got to be included with the assumption that it has generated some assets in net current assets, i.e., and usually we just assume that it's gone into the bank. Okay, so that figure there, we need to add in the profit. Now that's new to you. I've left it separate, and this will illustrate the point strongly to you. The fact that we've identified a difference between the top and the bottom, this should be quite memorable to understand that it's not just the cash that was raised from the share issue minus the liabilities that we've got on tax and dividends. It's also got to be the profit as well. Okay, so let me just minimize this. Well, not minimize it, let's resize it. Plus the 100,000. Profit generated has gone into the bank. So that is actually 264. That is 464, and that means the top half and the bottom half are equal. Okay, so remember that for the next question as well. Okay, I'll leave that on there, and in fact, I need to have a look at the second question. Let's just see, is there anything dodgy in there? Apologies, guys, apologies. You can't do this one. This is a bonus. Okay, the next one, alpha, beta. How about doing gamma? Let me just have a look at gamma. Assets have been revalued. There is a tax. There's a share issue. There's dividends. Right, yeah. Guys, can we have a look at gamma, please? Let's see how far we can get through gamma. I'm going to reveal the answer in 7 minutes. And that's when we'll call the lesson to a halt. We're doing gamma. We're doing the same process as we did for the first question. Okay, so try to remember what we need to do here. I'll give you some prompts. I'll give the answers away, I'll just give you the prompts. Apologies, you're losing the question there, aren't you? Right, sorry guys, I was on mute there. What I'm suggesting now is that you've got two. I'm going to leave this for homework, by the way, because I know some people are just going to copy the answer, and we've had a very intense lesson. So what I'd like you to do is to finish gamma off for homework. So 375, question gamma, finish off for homework. And I also set you question number 3 on document 374. Okay, apologies, I've been talking for the last 3 minutes, but it was on mute. Okay, just to reiterate, we're finishing the lesson now. Thanks for the participation. Excellent, excellent, Robert. And I don't want to put the answer on just for this just right now. I'm suspecting some people will need to review the lesson in order to do this comfortably. Otherwise they're just going to copy the answers. Okay, so we'll call it a day. Register's been taken. Yep, hopefully you'll have a nice, good day today, and I'll see you tomorrow. Bye now.